Hello everyone, welcome to Blue Dragon Actuarial. Now, before we start with this subject, which you can see on the screen, that is impact of anti-selection on life insurance product. Just like to state that I am very delighted to share that SP2 coaching will start from 3rd of July. Like I launched the course, right? It will be recorded course and all the other details would be there. Doubt clearing, when we'll have doubt clearing, how many videos will be published or chapters will be released in a particular week, what will be the structure, all of those would be kind of discussed or released in 3rd of July, right? Maybe at the later half or maybe at 4th of July, maximum 4th of July. Maybe some problems with editing, so it might happen like that, right? And yeah, that's it. Then we'll launch Sparkle hopefully on 6th or 7th of July. Depends on once again the editing and everything. And CP2 will start on 15th of July. Once again, you might think that, oh, CP2, you are launching so late. The exam is on 13th of September. Relax. 15th of July is enough time for you. There is 2 months of time. You don't require that much of time. In fact, 1 month is sufficient. 2 months is just too much. In any case, right? 15th of July or 16th of July, maybe approximately in these 2 days, CP2 will also come into picture, right? So these are the three courses that we are targeting, and yeah, it will start with SP2, right? So watch out for that. I'll also post in LinkedIn, also in our WhatsApp community. In case you have not joined the WhatsApp community, the link is in the description, and you can also come back to our website and register and keep on checking there, right? In the actual section, it will be updated. Anyways, now moving on to the subject today. I hope that this video will be smaller because it's just a question, and I have kind of answered this question, and I have also asked some questions of my own to all of you, and maybe those who would answer it correctly with logic, right? Not with lottery guess, right? Those who would answer it correctly, maybe will plan something for them in future. Anyways, so the question is, or maybe what we are going to discuss is impact of anti-selection on life insurance product. The reason for this topic is because of a great question that I've received. Now, I'll not name the person, but you can go to my previous video and see that someone has asked this question. And the question is, how can anti-selection seem to be reason? Now, last time or I posted a video saying that term product offer surrender value. The main reason for that was anti-selection, right? And there was two more reasons, that term product has only protection component, and otherwise the term product has very small surrender value even if they wanted to give. So because the reserve would be very small. Now he agreed with the who has asked this question, he agreed with the last 2 points, but the most important point, he is saying that how can it happen like that, because non-par saving product will also have anti-selection, right? And the other two points completely make sense. Thanks for the content. So now this is a very now this is one point I'd like to highlight, and something that I'll like to kind of state for others, right? He has taken the first step in becoming a proper actuary by asking this question. That is because something he has felt that it is not right or not correct, he has questioned it, right? That is the way you become a proper actuary. You would not become a proper actuary by clearing papers. I have told this time and again, right? This is how you become a actuary, because as per me, actuaries are the person who knows the why of the industry they work in. All the whys, like something happens in the insurance industry, or someone works in the banking industry, someone works in the investment industry or stock trading, pension industry, etc. Whatever happens in this industry, why that is happening, the answer to that why should be crystal clear to an actuary. If that answer is not clear, then you are not actuary, you are just a IT person, maybe just doing something manually, right? No matter how many papers you have cleared. So it's the knowledge that matters, and I think in future this paper would be relevant because many people will have those paper. It's artificial intelligence will take over, and the knowledge would be the only thing that artificial intelligence will not take over very soon. So that's where you will have the edge over others. And in any case, if you have the knowledge, you can use artificial intelligence to your own advantage. You can create your own AI, and that will do the work for you. So coming back to the topic, however, the second step for this would be if he himself can answer why this is happening, because someone is saying that anti-selection can be a reason. Now that someone can be wrong. Like in this case, I can be wrong. Anti-selection may not be a reason at all, right? But he need to produce the counter example. Like, I think for this reason, anti-selection is not a reason. Or maybe let me also try to understand why someone might be saying that anti-selection is a reason. That is the second step. In If you can do that, then the third step would be confirmation, right? You can confirm that from someone senior, or you can discuss that with in a forum. So if you can follow this three step, you are well in your way to become a proper actuary. However, a big appreciation to the person who has asked this question, because he has tried to gauge the why part, right? And that's what anyone else who have probably not asked the question, who have probably not thought over, who have kind of thought that whatever I have said is correct, right? This person is ahead of all those person because he have asked a question. Now, moving on. So this is the question. Now, the question is, can anti-selection, like how is anti-selection different for a term product as compared to other non-saving product? Because anti-selection happens there as well. First of all, let us understand. Once again, I have a similar complaint, right? Once again, I like to highlight, last video I have also highlighted this. That is, there is more video views coming on side topics. Once again, if I post a video on my salary, if I post a video on my girlfriend's salary, my boyfriend's salary, there will be too much of views. But the moment I post a video on knowledge topic, right, there would be 100 views, 150 views. Why? Because no one is interested in knowledge. If you are not interested in knowledge, if you are here for entertainment, then you are not going to become a proper actuary. You are not going to get to the salary level. Because, for example, in my salary, I have two videos on salary, one with for all designations, one on my own kind of tentative salary, and there are so many views on that, right? I made a video on stop cheating in IFO exam. There are so many views on that. However, if I make any video on knowledge, something like this, there will be very limited videos because people are not interested in knowledge. And if you are not interested in knowledge, you are not going to get to that salary level, get to that designation or anywhere, right? So you have to spend your time, you have to take the effort to understand what is going on. And like, that person has asked the question, why something is happening. Otherwise, there is no point. You are in the wrong field, wrong profession, wrong designation, whatever. Right? You are going to, like, you yourself is causing much harm to you. Should belong to something else. Moving on, as I mentioned, paper will not get you 1 crore, but knowledge will, and took effort in the right direction. That I have already mentioned. Now, what exactly is anti-selection? It is basically misinformation. What does that mean? That means is that cause insurer to give insurance to wrong people or to people at wrong rates. Now, there are some countries, as for example, I know New Zealand. In New Zealand, you cannot refuse insurance to a person saying that you are in bad health, I cannot give insurance to. In India, you can do that. Suppose someone has substandard lives, you can probably refuse an insurance saying that this person is in too much of bad health, I cannot provide an insurance cover. That is possible in India, that is possible in UK, but there are some countries where this is treated as unethical, like everybody would have right for insurance, and because of that, you cannot refuse insurance product, but it can be very high premium. Like instead of charging maybe 100 rupees, you can charge $2,000. I have moved from rupees to dollar, but you can charge that much of premium. But you have to give the insurance product, right? So basically, anti-selection means misinformation that causes insurer to give insurance to people at wrong rates. So you might be a substandard life or substandard risk, but because you have not disclosed that, insurer will consider you as a normal life, like you are healthy person, and that's why they will charge you normal premium, but they should have charged you much more higher premium, right? It happens because a person who have more knowledge about his or her health, obviously I know more about my health as compared to the insurer, right? No matter how much the insurer can do some sort of medical checkings and etc. And that is why uh, he or she choose not to disclose it, because I know I am in bad health. I am just praying that whatever medical underwriting insurer does, maybe I'll not be caught, and if I am not caught, then I have kind of not disclosed it, right? So there is a misinformation. I have an information, insurer do not have that information. Because of that lack of information, now insurer is charging me a wrong rate, right? So that exactly is anti-selection. What would happen in this method? like you would be like because of this, or because maybe like in the case of surrender, the reverse was happening, because I knew that I am in good health. Because I'm in good health, I know that I'm never going to get the, there is no need for me to have a term policy. I'm going to survive the entire term, so I'll take the surrender value and leave, right? So that's exactly what you have. Some information, the insurer do not have that information, and because of that you take some decision which the insurer cannot take, right? And because of that, the insurer will be left with people who are in poor risk, who are bad risk, because you who being a good risk is leaving, right? So, or in this case, someone who is a bad risk is coming to the portfolio of insurer because he or she has not disclosed the information. So that is anti-selection, right? The insurer is selecting the wrong people. Now, this word anti, I have heard people from US, Canada, they are saying, calling it anti-selection, or semi-final is called semi-final. So whatever that is, right? I will not go into the, the way it is spelled, anti-selection or anti-selection, whatever you are calling it. So that is basically misinformation. You are not providing the information to the insurer, and insurer is not able to take a good decision because you have not provided the decision. So in turn, the insurer is suffering because the insurer is either left with bad risk or the good risk are living, right? So that is exactly what is anti-selection. Now, how insurer make profits on life insurance product, right? Now, this is a very big subject that is called analysis of surplus arising, and I am planning to create a course on this. This is such a big topic, right? And only this would be only for experienced people. Beginners would not be able to understand anything here. You need some amount of work ex. Uh, this is a like a maybe a beyond SA2 level, concept. There is a chapter in SA2 as well on analysis of surplus, which is very limited. You need to understand a lot more than what is written in that chapter. That's why paper certification never help you. Any case, this is a huge topic, but for our purpose, we'll simplify it a bit, right? Now, in term products, when will insurer make profit? In term products, insurer do not have to pay anything if the deaths do not occur within the term period, right? So your term product has a term of 10 years. If the death do not happen within the 10-year, you are not supposed to pay anything. As an insurer, you make the entire profit, right? The entire premium, the investment income, etc., all is your profit. So but in saving product, for example, endowment product, a whole life product, you know that if the person dies within the term, you have to pay the maturity with death benefit, right? If the person survives, you have to pay the maturity benefit. In whole life product, and usually in endowment product, the death and maturity benefit are same. That's the industry practice. In whole life product, it is for whole life, right? In India, it is for 99 years. So you know that a person will die between 99 years. So at any point of time, you have to pay the benefit, right? So it is in saving product. In term product, the insurer will have the entire profit if the insurer do not pays, right? So it is not about the timing. But in other product like endowment product, whole life product, the insurer knows that the insurer has to pay the benefit, right? So it is just about the timing. If the insurer pays early, then the insurer will have lower investment income, then the profit will be lower, or there might also be losses, right? If the insurer pay later, then there would be a higher profit, right? The later the insurer pay, there will be higher profit because of the time value of money. Once again, that concept I have touched upon in the previous video. So you can go back to the video, the saving component and how it is related to the saving account of a bank. The concept is kind of similar, right? I'm not going to go there. So in term products, the number of deaths matter, but in saving product, the timing of death matter, right? So in term product, you want less people to die. If your expectation is 10, you want 5 people to die, then that will be very good for you. But in endowment product, in any case, whether that is 10 people or 20 people, I have to pay the amount to 10 or 20 people, right? In whole life product, same thing. I have to pay the amount, whether how many people are there, I have to pay the amount. It is when I am paying the amount, because if I'm paying the amount too soon, then I'm making losses. But if I'm making, or maybe small profit, but if I'm paying the amount later, then I'm making profit, then I'm good, right? So in term product, the number of deaths matter. And in other product, the timing of the death matter. That's what we have kind of discussed till now. So I hope that is clear. So is term product different from non-product? Unlike MS Dhoni said, this time, definitely yes. So term product is a pure protection product, like it's a proper insurance product. In fact, saving product are kind of created just to add that extra bit of that saving thing as well. But insurer is supposed to sell protection product only, right? Because insurance is for protection. Insurance is not for saving. It's an additional thing that along with saving, it's an add-on feature, right? That's the saving product. So anti-selection matters most in term product because of anti-selection, you are left with bad risk in case of surrender, right? And because of that, number of deaths can be more, right? As compared to previous situation. Now, in earlier situation, you had maybe like if surrender is allowed, maybe your portfolio has 100 people, right? And you know that out of this 100 people, you are expecting 10 deaths, right? So you would be receiving the premium for those 90 people, and 10 people you will not receive the premium. You have to pay the death benefits and everything, right? But in this case, because if those maybe 70 of those people know that they are in good health and they choose to leave, then in this case you would only be receiving the premium for those 20 people, because 70 has left because they are given the surrender option, right? And you are only getting the premium and the investment income, whatever, for only those, are making profit only for those people who are for those 20 people, those would be the bigger chunk of profit, right? And for the remaining 10 people, the sum assured is quite huge, and you are paying that sum assured, right? So earlier, as compared to the earlier situation, the situation has further worsened, because in term products, once again, the number of deaths matter, and number of deaths as compared to the entire portfolio. Earlier it was 10%, right? And if people leave, if healthy people leave, then this percentage increases. Then this percentage can become 40%, 50% as well. So in term products, the anti-selection, the impact of anti-selection is very, very high, right? Because in term product, the number of deaths as compared to the entire portfolio, right, that increases significantly. But in other products, the insurer have to pay, and with bad risk, the timing will be quicker. Like few people will die quickly, so there will be some losses, right? And those or there might be some smaller profits, but the insurer anyway have to pay, right? So in this case, the timing would be quicker, and also for other products, the premium would be much higher. The investment income would be much higher. For term product, the investment, as I considered before, the investment reserve is very, very small. The investment income is very small. So those other things are not contributing much to the profitability of the term product, right? In term product, the main source of profit is mortality, but in other product, the main source of profit is investment, right? And in that is why timing of death matters. So in this case, if in other products, there are the good risks are still there, right? Or the good risk also leaves the company, but what the maximum that the company will suffer is the timing. The investment risk return would be much lesser, right? That would be the hit to the company, right? Mortality wise, it would not be a big hit, because you know that you have to pay whether now or whether at a later term. Either it's maturity benefit or it's a death benefit, you have to pay, right? But in term product, the impact would be much severe, because the number of death matters, the timing of death does not matter, right? And because of that reason, anti-selection has much more vigorous impact on term product, right? I think now it is clear. And because of this, when in the insurer have to pay more, or insurer have to lose more in term product, because that is the main source of profit, or that is the main source of risk for insurer, while as compared to the other products, where the main source of risk or profit would be investment, would be the time value of money. And that might not, even if a bad risk is, even if that risk dies, but that risk dies maybe just 1 year before the maturity, the insurers have made enough profit. But in term product, even if that person dies 1 year before maturity, the insurer may have lost money, because the reserve is very small, as compared to the sum assured, right? So in that case, because of the nature of the term product, because how it is a protection based product, right? Because of that, because of the number of deaths which is increased by anti-selection, the term product is quite different from the saving product, right? And but in term products, number of deaths will rise, causing big losses, and this is the difference between that's what a very less chance of profit with huge. There is a very less chance of profit with huge anti-selection. So I think I have explained that multiple times in this slide. So I think that is clear now, right? So moving on. So now we come to the portion that where I have some question for you. So if you want to be a proper actuary, so obviously underwriting is the tool that insurer have available to themselves to counter anti-selection, because in underwriting they assess your proposal form, they take out the information, they also do medical underwriting, financial underwriting, so many types of underwriting, so that they know more about you and they understand that you are not lying to them, etc., etc., right? Those are the, that's why medical underwriting is done, because your blood test, you cannot falsify your blood test, right? So it will tell if there is some problem, and which probably you yourself don't know would be revealed there. For example, you don't know there is blood, you have blood cancer, and your blood test will reveal that you have blood cancer, right? So that has happened. I was working in a company, like when I was working in SBLF, it has happened with a person. He did not know that he has cancer and it was revealed. So that is there. But is underwriting required for this product, endowment policies? Because I've just now told that timing matter, number of deaths is not that significant for endowment policy. So is underwriting required for endowment products? That is my first question. Second question, is underwriting required for group products? Group means a policy like employment, right? Employer has all the employees under the umbrella of a group product. So is underwriting required for a group product? And finally, is underwriting required for a annuity product? So what is your answer, right? You have to give logic. You cannot say yes, underwriting is required for an endowment product, no, underwriting is not required for group product. That is not of any relevance to me, right? Then you are playing lottery. But you have to give logic why underwriting is required or not required for endowment, group, and annuity product. What is your logic? That logic will make you a proper actuary. Now, if you are interested in this sort of why and the type and the way I explain things, I go deeper into the subject, which I believe many people, even at very senior position, cannot. Then watch out for SP2 course. We are launching that on 3rd of July, and I hope you will enroll and get most benefit out of it. Thanks for watching this video, and see you in future videos.